InvestSMART's separately managed account benefit number 7. It's not a pooled investment. Pooled investments like managed funds can disadvantage the long-term investor who is happy to ride out the volatility of the market. Managed fund investors' performance can be negatively impacted by herd mentality of people putting cash into and taking it out of the market at the wrong time. In a separately managed account, there is no herd, just you.
Hello, I'm Tony Kaye. I'm the editor of Eureka Report and welcome to Property Point. I'm joined as usual by Nerida Conisbee, Chief Economist of REA Group.
Thanks for having me.
Welcome, Nerida. Nerida, I thought I'd start off today just talking about what's happening in the property market because we know that clearance rates are still really high. The market's very strong, but just wanted to get your take on it.
Yeah, look, the market is very strong. So we track demand on our site and look at the number of people who are looking to buy and compare that to listings. And we've never seen such high demand. And every couple of months we hit a new peak. We saw a bit of a drop-off last December when banks started increasing interest rates, but everyone's piled back in there and demand levels keep rising.
There's all sorts of things going on at the moment. The banks have started creeping up some of their interest rates. We've had APRA come out and lay down some new rules regarding investor-only loans. So there's steps being taken behind the scenes. It doesn't seem to be really slowing things off at the moment.
No, not yet. I mean, a lot of the measures were introduced towards the end of last month, and and certainly it hasn't flowed through to our site. But there is a lot being done, like you said. I mean, there's the cooling measures that APRA are putting forward, and particularly around interest-only loans. There's a lot of concern about the number of interest-only loans that have been written. I think it was 40% of all new loans were written interest-only last year. So, obviously that's of concern. The US interest rates are starting to rise now. That's starting to impact banks and how much they charge. Their cost of borrowing is increasing as well. So that's flowing through to consumers. And, there's a lot of government measures as well, so a lot of government concern with how hot the property market is going. I mean, looking at Sydney now, 20% price growth, Melbourne's at around 16%. It's certainly not a great situation to be in.
And where do you see things panning out over the medium term?
Look, I'd imagine the measures will have some impact on buyer activity. I mean, we haven't seen it yet. I mean, certainly in March there was no decline in demand. We hit another peak. April, we may start to see a bit of a moderation. And look, I hope we do. I think the amount of stress a lot of people would be going through to get property at the moment, particularly people who are first home buyers, affordability levels are continuing to reduce, particularly in Sydney. I think it's really challenging for a lot of people.
Of course, we are seeing in some markets already that prices have come off, notably Perth.
Yes.
But the story has always really been about Melbourne and Sydney, I suppose, in terms of the strong growth.
Yeah, and I mean, it is a bit of a concern for Perth. I mean, given that a lot of the housing policy is at a federal level, and particularly with regards to, affordability. Everyone talks about affordability being a huge problem. In Perth at the moment, affordability is improving quite rapidly as prices start to reduce. So, Perth is doing it tough. Sydney is very, very strong. Melbourne's also very strong. So on a national level, we do have very divergent performance across all the capital cities. And
that's the issue, I suppose. How do you tinker with a whole system without affecting other parts more than others?
Yeah, and it is a problem because, a lot of policy does seem to be focused on what's happening on the eastern seaboard and particularly focused on what happens in Sydney. And, if you're in Sydney at the moment and you're trying to get into the market, it's, almost impossible given how fast prices are moving. But, yeah, if you're in Perth, it's, relatively easy to get into the market, but there's no jobs. So, you've kind of got these other problems occurring across there.
Yeah, there's a lot to really sort of analyse in this whole process of cooling off the market without impacting some people more than others, depending on which areas they live in.
Yeah, absolutely. I mean, even discussion about oversupply. I mean, Melbourne and Brisbane are the markets that most people are concerned about the level of development. But then you've got Sydney, where we haven't seen anywhere near the amount of development take place over a prolonged period, over decades, and that's really starting to bite in the Sydney market. So, on one hand, we've got concerns about oversupply, and then we've got concerns about affordability, and then you've got Perth, prices dropping. It is, there's a lot going on and a lot of different behaviour, and makes it very hard to try and control that at a federal level.
And every day I'm reading articles, some are saying that the markets, particularly Melbourne and Sydney, are going to head for a harder landing. Some are saying a softer landing. What's your particular take on that?
Look, it's really hard to tell. I mean, if it has a hard landing, it's typically because we see job loss. And at the moment, both those economies are doing really, really well. If we do start to see job loss, though, I mean, I think there will be a lot of ramifications throughout both those cities, because if you consider how much people are borrowing at the moment, there's a lot of people that have very large debt levels. And if we start to see interest rates rise, that obviously impacts people's ability to pay back their loans. But, people can usually scramble around and find a little bit of extra cash to pay off an increasing loan. If they lose their jobs, that wipes out a whole income, and that really causes problems. If we have a look, it's in Sydney is a really good example. Following the GFC, we did see prices drop in Sydney at that time, and it was because a lot of people, particularly finance people who were very well paid, started to lose their jobs.
Well, I guess we'll just have to wait and see what happens, really.
Yeah, we're watching it very closely.
Yeah, well, thanks very much for coming into the studio today, Nerida.
Thanks for having me.
I'm Tony Kaye, I'm the editor of Eureka Report. Join us again next time for Property Point.